Hello, everybody. I am Krista Rue from HLC Bookkeeping and Office Services, and we host a little live thing every Saturday for 10 to 15 minutes just to talk about some topics that our clients, friends, or whoever are talking to about us. So therefore, we thought it might be of interest to you all. This is my twin sister, Christina.
Hello. Happy Saturday.
At least we have sun.
Yes, we do.
It's starting, hopefully. Warmer. All right. Let's see what else. Oh, so let me recap the last three
Topics we covered last
week. Spare time. We talked about
what is that?
The lack thereof, and perhaps we need to be scheduling for spare time.
Mm-hmm. Prioritize it.
Right.
It feeds your body and your soul.
That's right. And then our second topic was sweet dreams, because you can't vision what your future is if you're not dreaming about it first.
Mm-hmm.
So take the time to be quiet and think.
And dream about what your future can be.
That's right. All right. And then the third topic, we're talking about the balance sheet. So exciting. And last week was all about assets. So let's see what this week will bring.
Mm-hmm. And the reason we're talking about balance sheets is because the bookkeeping field, I guess you would say, there's been a lot of retirement within the last 5 years, and up through 2023, 50% of all bookkeepers will have retired, per the U.S. Census. So let's see what the new U.S. Census says when that comes out.
Yes.
Mm-hmm.
All right. So the first thing we want to talk about, and we've talked a little bit in the past about making sure you're part of your local community, but we wanted to delve a little deeper. So Christina, you had something to discuss?
Yeah, basically, why do it? Because sometimes people ask us, well, but it's so busy. I don't have time to network. I don't have time to really care about anything else but my business. Well, number one, that's not a good attitude to have. Because if we're one-dimensional people, we're not living life to the fullest. So why is it important to get involved in your community? Whether it's your business community, your church community, your interest community, whatever, it helps expand us as people. Did you just knock something over?
I just knocked stuff over.
Okay. So yeah, it helps expand us as people, but it also helps our community get stronger. So we make an effort to be part of different organizations. We go to their networking events. Speaking of which, we have one coming up on Thursday for the Jeanette Business Association. So we're still taking your orders,
your reservations,
chicken or beef.
That's right.
Let us know by Monday noon. Yeah, so it's important to know what's happening in your community because it strengthens your community. And that's how you get to meet people who become new customers or new vendors for you. Or
just a good mentor.
Exactly.
Because if they've been in your community, chances are they know a lot of people.
Correct.
Who could help you.
And let's talk about
they're usually good people.
Yes. And we need to be welcoming to new businesses within those communities. So just keep that in mind. Whenever that new person comes to a meeting, they're nervous. Definitely are. They might hide it well, but they're nervous. They don't know the social mores of the area or whatever. So be welcoming, be hospitable, invite them in.
But don't be like a vulture and swoop.
Yeah. What can you do for me?
Yeah.
Who do you know?
There's a balance.
Yeah, exactly.
There's a balance.
Between the swooping and the welcome.
Yes. And the ignoring.
Yeah.
So you got to be in the middle there.
Exactly.
All right. And then the second thing we wanted to talk about is a recovery startup under the Employee Retention Credit.
Mm-hmm.
So, what is a recovery startup?
Because not everybody now, there's advertisements everywhere about the Employee Retention Credit. But if you didn't open your business and you didn't have employees as of that February 20th date, is that what it is? February 15th
15th.
date.
Of
Then-
2020.
Yeah, then you're not qualified for the employee retention credit. However,
Yes. So, how do you qualify?
if for
The recovery startup.
it's different language, a
Right.
different program under the same umbrella.
That's correct. So, if you started a business
After
on or after February 15th, 2020, we go with the real words here. Your annual gross receipts don't exceed 1 million for the individual 2020 or 21 tax years. You have at least one or more employees other
W-2
than the owners.
and
Because owners and family members don't count. You have to have an employee other than the owner.
Mm-hmm.
Then you may qualify as a recovery startup. So give us a call.
Mm-hmm.
Now, in addition, if you purchased an existing business that was in operation on or before February 15th, you may or may not. That's a little bit more, I guess, questions. It all depends on your unique circumstances and different rules apply.
Mm-hmm.
So you want to make sure you talk to your accountant and see if you qualify for that ERC.
Yep. And we have a very easy process here to help you process your employee retention credit or your startup recovery. So make sure you give us a call if you have any questions, comments, concerns.
Right, because a lot of people were running into their brand new businesses, but they started in 20 or 21, say end of 20, beginning 21. First, good for you. And
Yay,
second,
business!
they were like, oh, this employee retention credit doesn't apply to me. It can. So,
Under the umbrella.
yeah.
There's
So
something else
definitely
under the
look
umbrella.
into that.
Mm-hmm.
All right, now for my exciting part. So, balance sheet. Remember, what did we say balance sheet was? That's a snapshot of your business for its entire life since you started. So, last week we talked about assets, which is the good portion of the balance sheet.
Fabulous.
Fabulous. You want more and more and more of that. And then now today we're going to talk about liabilities. What are liabilities? They're simply what you owe other people. And that can be in the form of a loan, a line of credit, a credit card, but it's someone has extended you
Private
money.
loans.
Right, private loans, hard money lenders, but you have to pay it back. It has to be on your balance sheet. All right. And the important thing about loans is only the principal payments, not the interest, go on the balance sheet. The interest belongs on the profit and loss.
Correct. So you have to break up the payment.
That's
so many
right.
people don't break up.
They don't. So if you have $1,000 a month payment and $100 of that is interest, $900 gets posted to your balance sheet loan account and $100 gets expensed to interest expense on your profit and loss.
Correct.
Okay, so $1,000 loan, $900 principal to the balance sheet, $100 interest to the profit and loss. Make sure you're breaking that down, because otherwise, if you're posting everything just to that liability account, you're overpaying the loan on your books, and it's not an accurate picture of what you owe.
Yep. I've gone in, reviewed books, and they're like, oh, that loan's almost paid off. I'm like, really? And then I look at a statement. I'm like, this loan is not almost paid off. And it's because that person kept posting just to their
Right. And if it's a significant loan, say of $1 million, you might be paying $12,000 a month, but only $8,000 is towards the principal.
Correct.
So, like, that's a big, big difference.
Yeah.
So, in order to accurately reflect where you are, you have to be posting things correctly.
Yep.
And you should be reconciling that, just like you do your bank accounts every month.
Because you get a statement.
You get a statement. Make sure that that liability matches the statement.
Yeah. And if you're not getting a statement from your lender, why aren't you?
Right.
You should be getting a statement.
Or have they supplied an amortization schedule, which breaks down for you the principal and interest of each payment?
But if you pay more
Then that's
than
out
what
the
was
door.
listed on the original amortization schedule,
Chuck it.
it's done.
That's
You
right.
have to run a new one.
That's right. And there are tools. You can go to bankrate.com and put in your principal, how many more payments you have, what the interest, and it'll generate a new amortization schedule for you.
Yes.
But at the very least, if you're paying more than what is required on that loan, every year you should be asking for an updated amortization schedule.
Yep. Important. And here's how you can remember liabilities. What does that mean? What do I do? In my mind, you're allowed then to lie a bill to the side because you don't have to pay it all right at once. So you're lying a bill down to wait. That's a liability. So like it's
Is
not
that grammatically right though?
I don't know. I'm just telling you
that's
what works for me.
Yeah,
that's what works for me.
Find your own system.
That's right. Because I mean, let's face it, accounting terms are not necessarily common folk friendly, shall I say it?
Yes.
So there's a learning curve to try to get all the terms and the amortization
it's just simply
and
what
the
you owe.
depreciation and all that other fun stuff. So one step at a time, people. That's what we're here for. One step at a time. We'll just share some knowledge with you. And go ahead.
We also should talk about if the owner is loaning the business money.
Okay. Now, Krista, tell me, what's the difference if I, as an owner, give the company money? If I don't want paid back, is that a loan?
No, that's a contribution to your equity. And that's different.
But if I want paid back,
then it's a loan. But you have to follow loan rules.
Yes, you do.
Meaning
pay yourself interest.
You should be charging interest. There should be a defined amount of time that the business has those funds.
To pay you back.
Yeah, and to pay back. You treat it you're the bank at that point. You're the banker. So define it. Give it an amortization schedule. Why can't I talk today? Amortization schedule. And
we didn't even imbibe.
We didn't.
No.
Although I did have a boost, and it does sort of set me up, so that could be it. All right. So
chocolate high.
Chocolate high. That's right. But so it's very, very important to take care of all your records appropriately. Because yes, as bookkeepers, we live on the profit and loss, but remember, we visit and like the balance sheet.
And we interact with it.
That's right.
So we want it to be correct.
We're friends. We hand off that P&L to the balance sheet at the end of each year.
Correct. Bookkeepers to the accountants. And then they communicate back to us with adjusting year-end entries. Bonus! You should be getting adjusted year-end entries from your accountant so that we can make sure your books match your tax return.
Every year.
Every year.
All right. That was exciting. I love talking about stuff like that.
I know you do.
All right. So again,
she's an accounting nerd.
I am. I'm such a nerd about this stuff. I own it though.
I do too. I love it too.
I know.
It's the puzzle.
You're putting a puzzle together. And when it's ready, your owners are so happy because they know where they stand. Even if it's not the greatest picture, at least when you know where you stand, you can create the plan to get you where you want to be.
It helps you dream. Going back to topic number 1 from last week, when you have that foundation, you have the security to dream.
That's right.
So give yourself that gift.
That's right. Because think about it this way. If you were posting all those interest payments wrong and never correcting them each year, you might be thinking, okay, yes, I'm done with this loan.
Understated your expenses.
Well, that's and that's not a good thing, paying too much in taxes. But you might be thinking, okay, well, maybe I can take out another loan for another project, but you still would have that payment. And wouldn't that be a horrible surprise if you go get that second loan and you're still making the first loan payment for 2 years longer than you thought?
Yep.
So like this is so important. So many
Mhm.
businesses we've come across get themselves in trouble because they're not accurately reflecting their true picture.
Yes. Take your picture.
Yes.
Vogue, Vogue, Vogue.
That's right. I cannot stress this enough. Cannot. All right. So
That was from Madonna. That's her song. I'm not copyright infringing. Or whatever. Give credit to Madonna.
that's right. All right. So again, Krista Rue, HLC Bookkeeping and Office Services, 724-561-7458 or 60, call 60, sorry.
Yeah.
I'm never available. Well, I am, but it's hard to get me. Go ahead.
Christina Rue, HLC Bookkeeping and Office Services. And we're getting into our busy
Which is sort of
season.
counterintuitive because accountants are sort of busy at tax
Right.
time.
But we do everything up until taxes.
time. And we work with a lot of seasonal businesses
Correct.
like landscapers.
Yeah, because not
and stuff.
everybody can find a bookkeeper.
Right.
We'll just have a job 6 months out of
just
the
5
year.
or 6 months of the year.
Yeah.
That's it. Yeah.
Exactly.
So
All right.
we help
We're
those
over
people.
time.
Oh, we gotta go.
Yes. Thank you so much for joining us and happy Saturday.
Bye.